Starting a law firm, everything you need to know about bookkeeping and taxes to put at least an extra $1 million in your pocket over the lifetime of your business. That's what we're talking about today. Okay, before we get into it though, who am I? I'm Christopher Small. I own Big Bird Accounting. We do bookkeeping for law firm owners and we're super good at it. If this is you and you want help, please go to bigbird.accounting.com, set up a time for us to chat. Okay, throughout the video, I'm going to break in a couple of times and remind you who we are and what we do. That's because we'd love to help you. Okay. All right, let's get into this. So what are you going to learn today? By the way, I've got notes right down there and I'm going to look at them from time to time. So if I look away, it's not because I don't like you. It's because I'm looking at my notes. Okay. All right. So what are we going to learn today? Today, we're going to learn what is bookkeeping and why is it important? Okay. Including how to tell if your services are priced correctly, including the magic profit number. You want to know like how much profit should I be making? You're going to find out. How to save thousands every year without any extra work, and how to tell if your marketing and advertising efforts are working. All right. How do you know if what you're doing is actually moving the needle? We're going to talk about the right business structure and when to switch. Okay. Including how to get set up and started fast to get your first dollar earned. That's what we're really trying to do, right? Where to focus when it comes to entity selection and what to ignore. And then when the right time to switch entity selection and how it can save you thousands of dollars a year. We're going to talk about that. We're talking about five simple tax strategies that can save you thousands every year, including how to drive the car of your dreams at a discount, the power of the business credit card, the hidden tax haven the IRS loves, the silent tool the IRS loves, and how to write off every vacation you'll ever take. Doesn't that just sound special? It does. And it's true. It can happen. Okay. And if you make it to the end, I'm going to give you my custom law firm owner chart of accounts. Okay. This gives you an easy way to immediately know the health of your business. You'll know what a chart of accounts is, I think, as we get into this video. Okay. All right, let's go. Okay. So I already mentioned why should you listen to me? Okay. I'm a founder of Big Bird Accounting. We service law firm owners exclusively. Okay. We do bookkeeping. We will do some tax strategy if you really want it. But we'll definitely answer tax questions that you have. BigBirdAccounting.com, by the way, if you want help. All right. So I'm also a licensed attorney. I've been practicing law for 20 plus years. I own a law firm right now. It's called CMS Law Firm. It's an estate planning and probate law firm. I've owned a criminal defense and personal injury law firm in the past. So I know how to do this bookkeeping stuff for law firms. That's why we are helping you out. Okay. Let's see. Also, have a test case. I have my own little personal science lab, which is my firm, to implement and do the things that we've been talking about. So that's how I know this stuff so well. And then also, I really want to pay it forward when it comes to knowing this information. I wish I had known this when I started. I did not. And I could have just saved a lot of money, saved a lot of time, and just been better equipped moving forward. So that's what I want for you. Okay. All right. Number one, let's talk about business structure. So you're starting your law firm or you've just started. You're probably wondering like, should I have an LLC? Should I do an S Corp? Should I do a C Corp? What should I do? Straight up, this is what you should do. Okay. It doesn't really matter if you do an LLC or no LLC. Okay. The LLC is not going to give you any tax advantages. The LLC will give you liability protection, which most of us attorneys who are risk averse want, but it does not give you any tax advantages. All of the income that you create from your law firm is going to pass through to you individually, whether you are set up as a sole proprietor or as an LLC. Okay. LLC looks a little bit more fancy. I probably would do an LLC if I were you. It's very, very easy to set up when it's a single member LLC. If you have multiple members, talk to a business attorney. Okay. You know this already. But the LLC, right, will give you liability protection, no tax protection. Okay. You don't need an LLC to start your law firm. You don't want to start with an S Corp election. It's not necessary. We'll get to why later. C Corps, not necessary either. This idea of like, oh, you're going to be able to avoid tax with your C Corp, it's not really true. Okay. Money that you keep in the corporation too long is going to end up getting taxed. When you take it out, it's going to get double taxed. Just stay away from the C Corp, in my opinion. And then when it comes to S Corps, all you need to remember is this and write this down. When I have $100K in profit, okay, when at the end of the year I put $100K in my pocket, that's when you need to think about doing an S Corp or think about changing a structure from your LLC. This video is for those starting a law firm, okay? Under $100K. If that is not you, I got another video that I'm going to make soon that will address all of your needs, wants, and desires, okay? You can keep watching. There's still good stuff in here. But when it comes to like S Corp election or entity structure, that's going to be a different video, okay? For now, if you are starting your law firm and you're under 100K, the only thing that I would focus on when it comes to your business is getting more clients, generating more revenue, becoming more profitable. You can do this entity selection later, and you can do the things I'm going to tell you below to save on taxes. Okay? Not below, I guess later. Technically, it's below for me. Okay, now you opened up, things are going well, you got a client. Congratulations, they gave you some money, you're going to put it in your pocket. Okay? Now, how do you avoid giving all that to the IRS? The short answer is with good books. Okay, good books you're going to give to your CPA. Your CPA is going to file your taxes based on those books. You want to make sure that they're clean, that you have categorized all of your expenses correctly so you can get the maximum income tax deductions. Okay, now what is bookkeeping at a high level? It's literally just documenting all of the revenue your business generates, which is income, all of the expenses your business incurs, which are expenses, to figure out if you have anything left, which is profit. Okay, that's what we're trying to do. Keys to great or clean books: separate business and personal expenses. That's the key. Sounds easy to do, but so many people don't do this. Okay, reconcile your bank accounts. Okay, this is the second key to great or clean books. What is reconciling your bank accounts? It's simply making sure that what you have, like in QuickBooks, matches up with your bank statement. It's a great way to make sure that you don't have duplicate transactions, you don't have duplicate deposits, that you are paying tax and expensing exactly what you should be, nothing more, nothing less. Okay? The third key to great or clean books is reconciling your trust account. Reconciling your trust account is very similar to reconciling your bank accounts, but there are 3 steps instead of 2. Okay? With your trust account, as you know, it's really important to keep it balanced. So you're going to have your client ledger, which is each client's rundown of expenses. You're going to have your total ledger, and you can use a spreadsheet for this at the beginning, which is going to show all of your client sort of expenses coming out of the IOLTA account together. And then you're going to have your IOLTA bank statement. Okay. You are going to take your ledger, the big one with all of the information on it, and you're going to compare the bottom number to the bank statement. If they match up, that is great. That's a good thing. Then if they don't match up, then you're going to have to take your individual ledgers and match them up against your big ledger, and then match that up against your IOLTA bank statement. Super important. The bar really likes this. If you want to keep your license, you got to keep your trust account reconciled. Okay. Now, can you do your own books? Yes, you can. And you probably should when you're just starting out. I would take the money that you're going to pay a bookkeeper and put it into networking, to advertising, to marketing, to some sort of lead gen activity. Okay. When is the right time to get a bookkeeper? The right time is sort of like one of these 2 things. Okay. 1, you get 2 months without doing any books. Okay. If you are not keeping your books up to date, you may want to consider hiring someone, or you make enough money to make it worth the investment. Now for us, I'm going to tell you, we start at about $195 a month. Okay. $195 a month. So it's not prohibitively expensive to get a bookkeeper. Depending on what you need, it may be more than that, but for those starting out, it's going to definitely be on that lower end. 195, maybe a little bit more, maybe a little bit, not a little bit less, maybe a little bit more. Okay. So you have to think about, though, for that 195, you're going to get to save several hours a month. You're going to have clean books, good financials. You're going to be able to see what's going on with your business. Definitely worth the investment. All right. I honestly would not use Xero or QuickBooks. If I was doing my own books at the beginning, I probably would just use a spreadsheet. If you're going to use QuickBooks or Xero, that's fine. It's just complicated. It's going to take time. Okay. All right. This is time for the best tax strategy you can employ when you're just starting out, which is separating your business and personal expenses. Very, very simple to do. Get a business bank account. Get a business credit card. Anytime you have a business expense, use the credit card. Anytime you pay the credit card, use the business bank account. If you have stuff for personal, use your personal account, personal credit card. Very, very, very simple. Okay. Now, once you have clean books, you can tell if your services are priced right. How do we do this? Okay. To get there, I'm going to have to describe the 4 categories on a profit and loss statement. Okay. We've already talked about 3 of them: revenue, expenses, and profit. But there's one more, and it's called cost of service. And this is what it costs you to get the work done. Okay. So not the admin, not the paper. Actually, the paper is included, but the office space, your rent, your insurance, it doesn't count. It's how much time are you actually working and who are you paying to get things done to actually get the work done. Okay. How do you calculate this? You're going to determine what you'd have to pay someone to do the work, and then you're going to reduce that from your revenue first. Okay. So for example, if you make $100,000 this year and it costs you $50,000 to pay someone to do the legal work for you, let's say it's a paralegal, all they're doing is drafting. Okay. The cost of service would be $50,000. So your gross profit, which is $100K, minus your $50K, okay, is going to then equal your gross profit, okay, to start with. As a rule of thumb, your cost of service should be at or under 35%. This gives you enough room for other expenses and enough room for profit. So in our case, the cost of service is 50%. We would either want to raise prices or try to get more efficient so we get our percentage of cost of service into the right place. Okay. All right. Side note, by the way, pretty much everyone needs to raise their prices. So just do that. All right. Okay. Bookkeeping can also tell you if your ads are working. This is pretty straightforward. So you're going to have an advertising line on your P&L. You just take your advertising line, divide it by your revenue. And if you are at like a 3-to-1 or more, I just would keep going. Okay. It's hard to really tell where everyone's coming from, but just use that as a baseline and that'll help. Okay. Let's see. This is all the fun stuff, by the way, that bookkeeping can tell you that no one else can. All right. You want to have clean books to do all those different fun things. Now let's talk about 5 tax strategies you can use today. Okay. Before I get into that, what I'll say is this. If you're starting out, if you're new, if you don't have a tremendous amount of profit, don't get too wrapped up in employing all these random crazy tax strategies. Get the low-hanging fruit, do that first, and then wait until you're making the big bucks to employ some of the other stuff, like real estate, for example. Don't need to do that at the beginning. Okay. All right. Here's low-hanging fruit. Separating business and personal. We've already talked about that. Okay. Capturing all of your business expenses is super important. Anything related to the business, reasonable and necessary for business, it needs to be a business expense. Put it on the card. You should be pushing the limit on what that is. Okay. The power of the business credit card. Okay. You use a business credit card to track your expenses. You get all these points that you get to use for whatever you want, to travel, for hotels. You can even get cash back. That cash back, that travel, you don't pay income tax on those points. Okay, so you kind of get to double dip. There's no income tax. So that's a tax strategy that you can employ right away. Vehicle, right? You want to make sure that you are tracking everything that you're using with your vehicle. If your car is over 6,000 pounds, you can write off almost the whole thing. Everything that you use for business, you can write it off in year 1. That's super important. Okay, so keep track of your fuel, keep track of your maintenance, registration, interest. If you have a car loan, you can write all that off with your business use at the end of the year. Okay. And then here's how to get a 30% discount on all your vacations. Just make them for business purposes. Okay. Find a networking group to talk to. Go to a conference. Okay. Have a strategic planning trip every quarter. Go there. That's a business trip. Okay. The travel is business. If you go to a ball game, if you do go to Worlds of Fun or SeaWorld or Six Flags, those are not business expenses. You would put them on the personal card. Okay. If you bring your spouse, if she's not in the business, you got to separate her travel, her meals and stuff like that. Those are not business. Okay, so keep that in mind. But for you personally, 30% off everywhere you go. Okay, try to make this quick, short, sweet as possible. That's it. Okay, but I have good news. You don't have to go it alone. People like me have been through this before and would love to help you. Okay, we exist specifically to help law firm owners, and we would love to help you. I would love to help you. We help a lot of law firm owners already. Step 1, okay, if you want help, bigbird.accounting.com, set up a call. I'll tell you what we can do. I'll give you the price, and if it's a good fit, let's go. Okay, takes about 15 minutes, can save you literally thousands of dollars, add millions of dollars to your bottom line, save you tons of hours a year. Super fun. Okay, so bigbird.accounting.com. Let's go.